To look more closely at what economic trends we can expect to see across Asia in 2012, I'm joined by economist Oliver Hartwich, who's a fellow at the Centre for Independent Studies. Oliver Hartwich, welcome to the program.
Good morning.
Now, you say what we're seeing now, song references aside, is the end of the world as we know it, that it's not all about the debt crises. So what sort of world order will emerge from what we're seeing in the United States and Europe?
Well, it's not your ordinary recession. It's not even your ordinary depression. It's really the end of an old world order. The end of an old world order that really began 500-600 years ago, the dominance of the West, first Europe, then America, and now the whole thing is shifting to Asia. And you can see it quite clearly. There are calculations, for example, of a hypothetical center of economic gravity, and that used to be in the North Atlantic just 30 years ago. Today it's already shifted to Israel, and by 2050 it will be in Tibet, so China. And that shows you really where the world is going in economic terms. Asia is becoming ever more important. Europe is in decline, I would say, in terminal decline, and America is struggling
Terminal decline?
Well, yes, if you just look at the demographic profile of Europe, Europe is aging, Europe is shrinking, and Europe with the European debt crisis and the currency crisis, I think they will have decades to deal with that.
So then what opportunities does this present for Asia?
Well, Asia is growing because Asia has a hungry middle class and it has enormous growth potential. And we're not just talking about China, we're also talking about India, we're talking about Indonesia. There are about 2.1 billion people to be added to the global middle class from Asia in the next 20-30 years. So there's an enormous hunger for resources, for energy, for consumer goods. And I think we'll see Europe decline and stagnate, but Asia will more than make up for that, what's missing in Europe. And
why do you think that Europe is suffering from a crisis of political leadership in the face of this situation in terms of the debt crisis?
Well, it's pretty obvious, isn't it? I mean, they've had, I don't know how many crisis
meetings
now. I mean, over the past 2 years, we've seen crisis meeting after crisis meeting, finance ministers, prime ministers, chancellors, all getting together trying to solve this crisis, and they haven't come up with any workable solutions.
Why do you think that is? Is it just because they're too close to it and they can't see the bigger macro picture?
No, because I think they're actually trying to solve an economic crisis as a political crisis. They've put enormous political capital into building up that European monetary union, and it's completely unworkable. So for economic reasons, they should just say, okay, this was a big mistake. We're trying to start from scratch again. Now, for political reasons, they're not going to do it because, as I said, they built up enormous political capital. They actually said if the euro fails, then Europe fails and the EU fails, and so they don't want to see this. And they are unwilling even to concede minor things like a Greek departure from the currency union because they think that would trigger, for example, a Portuguese departure, perhaps an Italian departure. So they're trying to keep this currency going, but actually it's just limping on and they're not really solving the underlying issues.
There was a point where China was touted as being a potential rescuer for Italy, which didn't actually happen. Do you see that there may be a time where China or other Asian countries will step in?
I think the Chinese would be foolish actually to invest their money in Europe because first of all that would mean that they had to pull out of America, and who would want to weaken America because they have got billions of dollars invested in America at the moment, so they would need all that capital to shore up Europe. I don't see any political will in China and any necessity to really do that. And apart from that, the Chinese may be asking themselves whether even they have enough money to bail out Europe because the sums we're talking about in Europe are now enormous, and even China may not have enough cash really on its hands to solve the European debt crisis.
Now, you say that this is that the focus is moving to Asia, that there are opportunities for Asia, but no doubt if there is continued downturn, continued demise in Europe and the United States, that this will have some sort of negative impact on Asia. It would have to.
Of course, definitely, because Europe, the European Union, is still China's biggest trading partner. So if Europe slows down, of course, the Chinese will feel that. And then, of course, that means that Australia will feel it as well, because it's basically a chain that we are exporting raw materials to China. The Chinese are converting that into some kind of consumer goods, and they're ending up in European supermarkets. So if Europe slows, of course, everybody else will feel it. And nevertheless, I think that there's a good opportunity for China to avoid the worst of these outcomes, because they still have an enormous middle class, and they are now emerging as consumers as well. So there's a good chance that the Chinese will be able to compensate for the European decline with domestic demand.
So is Australia then doing enough to take advantage of its position, its unique position?
Certainly not, because in many regards regards, I think Australia still behaves very much like a European country. I mean, just look at our political culture, which seems to be just as bad as Europe's political culture these days. But I think we should really mentally make that shift. I mean, Paul Keating talked about it almost 20 years ago, that Australia should really consider itself an Asian country. And actually, frankly, I think that's what we should do, because there are enormous growth opportunities in the Asian region. But that also means that we have to behave more Asian in certain ways. For example, we have to move faster. I mean, the time that it took in Sydney to discuss an extension of a railway line of 4 kilometers was enough time to build 420 kilometers of Shanghai Underground Rail. I mean, that shows you the differences in speed. I mean, we are simply not moving fast enough in Australia.
Too much bureaucracy and red tape.
Definitely. And I think our Asian partners are actually showing us how it works. And unfortunately, I think Australia is not very good at actually making good, positive working relationships with these countries. Just think of the debacle of our meat exports. Think of the blocked merger between the Australian Stock Exchange and the Singapore Stock Exchange. Think about that defense white paper that basically identified China as a major threat. I mean, we're really not very good at making friends in the region, and I think that's what we should be doing.
If we also look at India, you mentioned India before, and in sort of in reflection or in comparison to China, the two superpowers in the region, China's development has been quite extraordinary. India's is lagging behind. Why do you think that is? Is it because they have two different political systems?
That's probably true. I mean, it is easier, of course, if you've got a semi-dictatorship like China to actually put it on track and say, this is how we're going to develop. It takes a bit longer in a democracy like India. However, I think a democracy like India will have a more sustainable model, and precisely because of demographic effects as well, because China, of course, had this one-child policy, which will mean that China will slow down in the future at some stage, and that the Chinese population will grow older, and therefore resemble more the European economies that we see today. And at that stage, I think India will actually have a chance to take over and become the dominant power in Asia. But that may be 20 or 30 years down the track. And
just in reference to the story we saw previously, what's your view on a managed slowdown in China?
Well, I mean, it's very difficult actually to predict. But if the Chinese economy is just growing 8.5% now instead of 9.5%, what the Chinese were hoping for, that doesn't sound much, but yet it has enormous implications for China. However, I'm always a bit careful about these Chinese figures, because if you actually put the official Chinese growth figures and put them next to trade statistics or some kind of indices like the Baltic Dry Index, you can see that there are some discrepancies. You always wonder how they come up with these statistics and don't quite trust them.
Oliver Hartwich, thanks for joining us.
Thank you.